Okay, I've been allocated 10 minutes to try to convince you that Bitcoin could be useful in a portfolio. Yeah? So looking at the past, I think it's not really a challenge to imagine why Bitcoin could be something useful in wealth management. Since I'm only allocated 10 minutes, I'm not going to be very mathematical. I'm going to give you bullet points only. Whenever I talk about Bitcoin, I always start with a warning. The warning it is that the Bitcoin is very, 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 very risky. The Bitcoin is the only asset which is that old, which has reached 100% of volatility many times. To give you an idea of what is 100% volatility, the Lehman Brothers stock, the week of the bankruptcy, did not reach 100% volatility. Okay, so this is the bad news about the Bitcoin. The Bitcoin is very risky. Fortunately, I have a good news for you, which is that investing is about risk-taking. Why do I say it this way? Because, in fact, there is a sentence you should not be allowed to tell your clients or to think. The sentence is, it's too risky for me. There is simply nothing which is too risky for you. If you believe something is 10 times too risky for you, buy 1/10 of it. It doesn't make sense to tell this is not for my clients because it's too risky. This does not make sense. Buying $10,000 of Bitcoin is much less risky than buying $100,000 of S&P. You should never consider risk when you decide whether you want to invest or not. You should only consider the investment thesis. And it's afterwards, when you have decided that the investment thesis is convincing, that you are going to look at the risk to decide the scale, to decide the size of your investment. Whether you invest or not, never look at the risk. The risk is only useful to decide how to scale the investment. So this was the first bullet point. It was a warning, and at the same moment, a word of advice. I would like to talk to you now about what I believe are the 4 most important parameters whenever you are looking at the Bitcoin from an investment point of view. The 4 most important parameters, beside the fact that there is only 21 million Bitcoin, this is a figure that you need to have in mind, of course. The 4 most important parameters are the price of the Bitcoin, the volatility of the Bitcoin, the correlation of the Bitcoin to the other assets, and another parameter which is completely specific to the Bitcoin is its adoption. Okay? With regards to price, it's quite easy to understand the relationship between the price and some other parameters. And this is what we are going to talk about. We are going to talk about the relationship between those 4 parameters. The price, you know that there is only 21 million Bitcoin. So the more it is adopted, the more the price will go up. It's absolutely easy to understand the relationship. I would like to give you a small way to understand the importance of the 21 million. Do you know how many millionaires there are on the planet? There are 100 million millionaires on the planet. There are 21 million Bitcoins. So imagine the impact of simply the fact that the millionaires wants to buy Bitcoin. They are going to fight for it. To fight for it, price-wise. The second parameter is volatility. Volatility is something which is extremely important when you invest. Bitcoin is not a currency. Bitcoin is a project of a currency. Bitcoin is a startup. We are in 1997 and we are considering Google. And for Google going forward in 1997, there was 2 scenarios. The first one is that Google was worth nothing. The other scenario was that Google was worth trillions of dollars. There is a difficulty on this planet. It is that on this planet, nobody knows how to price a startup. Nobody on this planet knows how to price a startup. Google in 1997, it was either 0 or trillions of dollars. And it is the shock between those two scenarios that materialize in volatility. Volatility is simply the symptom of things that are not priceable, of the difficulty to price something. When the price of something is absolutely certain, there is no volatility. When you don't know what should be the price, there is volatility. And it is really the collision between those two scenarios. Is Bitcoin going to fail? Or is it going to be successful? That in fact materializes in what we call volatility. Now let's try to link volatility with one other parameter. And so we want to imagine what is the case that will draw the volatility down. In order to draw the volatility down, you need the likelihood of the zero scenario to go down. You need adoption to increase. The higher the adoption, the less the likelihood of the price going to zero, the less volatile the thing will be. What does it mean? It means that any serious investor that considers the Bitcoin is confronted with a dilemma. And the dilemma is either I buy today when it's very risky, but extremely cheap, or I wait until it's less risky, but I will have to pay a much, much more expensive price. And so here you see really the link between the price and the volatility and stability. The last parameter that I talked about was correlation. I'm a statistician by background, and the first thing they teach you when you study mathematics in university, it is that it is forbidden to ever exhibit a statistic without exhibiting its significancy. You cannot say the correlation of something is zero to something else. You can say the correlation of those two things is not significantly different from zero. Let's imagine, I consider this nice lady here, and let's imagine that we play heads and tails. At a moment, I will have 10 heads, she will have 10 heads. My volatility is zero, her volatility is zero. Our correlation is 1, but it's not significant. And so if you want to consider the correlation of anything with something else, you need to look at how significant is it different from zero. And in fact, across whatever time period you take, the correlation of Bitcoin to anything else will go up or down, but is always non-significantly different from zero. This is empirical. Now, from a more fundamental point of view, let's try to make up a scenario to fundamentally imagine what could be the correlation with the rest of the assets going forward over the long term. What are the two scenarios for the Bitcoin? There's one thing I can tell you. It is that 10 years from now, either the price of the Bitcoin will be below 5,000 or it will be north to 1 million. The middle scenario is almost excluded. And it's very often like that. What does it mean? Imagine the Bitcoin goes to zero. It's going to go to zero alone. Right? It's not going to bring the S&P or bonds or gold to zero. So if the Bitcoin fails, almost by construction, its correlation will be insignificantly different from zero to any other assets. Now imagine the Bitcoin is successful. If the Bitcoin is successful and the adoption goes very wide, the Bitcoin is going to become a shelter asset. And what is a shelter asset? When is it that you go to the shelter? When it's rainy outside. And when is it that you go out of the shelter when it's sunny outside? Which means that in that case as well, the correlation of the Bitcoin to the other assets, it's going to be insignificantly different from zero. And so those are, I was allocated 10 minutes again, so I think I have tried to be empirical, to look at the Bitcoin the way we looked at it initially at Tobam. The first thing we did at Tobam with regards to the Bitcoin is to write an investment thesis. I am a professional investor. We are professional investors at Tobam. We need to write an investment thesis. What is the investment thesis of Tobam with regards to the Bitcoin? It is that we believe that the Bitcoin possesses the fundamental and the empirical qualities that could make of it potentially a new standard or measurement of value. What is a thesis? What is the definition of a thesis? It is something that has an antithesis. If there is a thesis, there is an antithesis. I'm not telling you the Bitcoin is a new way to measure values. The only way to measure value as of today is a dollar. Telling you the Bitcoin is a standard today would be a lie. And this is precisely why it's interesting from an investment point of view. If it was already a standard, its price would be north to $1 million. It's something which is extremely easy to prove. It's precisely the fact that it's not yet the case that makes of it a very interesting investment. If I come to you and tell you my investment thesis is that Apple could reach $50,000 a share, you should not wait for it to happen before you invest in it. It will be too late. And so what is an investment thesis? An investment thesis is always about saying something that is wrong, but could become true in the future. And when it's true, it's too late. It's not an investment thesis anymore. It's something else.